Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. We've got Asian stocks climbing as chip makers extend their rebound on AI optimism, even as geopolitical risks linger. The focus now shifting to earnings from Alphabet and Tesla, with lofty expectations leaving little room for disappointment.
I will tell you, they want to desperately meet, and until they're ready to meet in a meaningful way, we have no interest in even.
President Trump there downplaying immediate talks with Iran as both sides exchange strikes. Oil prices are rising, putting pressure on Asian currencies, including the Philippine peso and the rupee. The yen, meanwhile, is on intervention watch. And U.S. Secretary of State Marco Rubio is in Manila as ASEAN Foreign Ministers confront renewed U.S.-Iran tensions, weighing risks to energy security and trade. He's also laying the groundwork for Xi Jinping's visit to Washington. And Trump adding fuel to trade tensions too, pressuring generic drug makers to shift production to the U.S. Companies, many of those in India, facing a 100% tariff from 2028, and that could double a year later. Our top story today, renewed concerns over President Trump's tariff agenda. He's announced plans to impose a 100% tariff on generic drugs imported to the US starting in August 2028. He's also threatening to double the levy to 200% 1 year later. India is expected to bear the brunt of the move as it's the biggest exporter of generic medicines to the US. For more, let's get to Le-Thu, who heads our Asia Consumer and Health coverage. So, Lisa, can you tell us more about what President Trump announced and what it's going to mean?
Yes, hi. Like you said, just a few hours ago in the Asia morning, Trump said on Truth Social that there will be a tariff of 100% on all generic drugs imported into the U.S. starting in August 2028, and that will double to 200% a year later unless these drug makers can move their manufacturing of these drugs onshore into the U.S. Obviously, he said in the post that this is to protect U.S. jobs and to rebuild, American manufacturing. But obviously, this Trump is also really playing into one of the points he's seized on for the midterm elections this year, which is kind of affordability, and the cost of drugs obviously plays into that as well.
Okay, so who's going to be hit by these tariffs if they go into effect?
Yeah. It's not really clear whether these will affect the raw ingredients or the finished product of the drugs. If it's raw ingredients, the hit will actually be on China, which supplies a majority of the active pharmaceutical ingredients that goes into drugs. If it's on finished drugs, obviously the biggest will be on India. About over a third of the drugs, generic drugs sold in the U.S. come from India. And obviously, these generic drug makers, unlike ones that make branded, patented drugs, operate on much thinner margins and are much more sensitive to cost overlays and have kind of much less ability to move quickly to potentially relocate their factory. So they would be quite vulnerable to these tariffs if they were to go into effect.
So how's this going to impact U.S. consumers and drug prices as well?
Yeah, so obviously the Trump administration has said repeatedly that these are to rebuild American manufacturing, secure drugs for the U.S. citizens. But obviously, a lot of pharmaceutical industry executives have also warned that actually, having tariffs could really impact the cost of generic drugs, which are typically very low cost. So if you take India, for example, India is a big supplier of generics in the U.S. for medications like contraceptives, medicines for high blood pressure and depression. So obviously, if there were tariffs on this, a lot of pharmaceutical drug makers may be inclined to pass them on to consumers, which would really impact the prices that the U.S. consumers would have to pay for these drugs.
All right, Bloomberg's Le-Thu there, who leads our Asia Consumer and Health coverage. Well, President Trump's latest tariff threat is also looming large at the ASEAN Foreign Ministers Meeting in Manila. And that's even after U.S. Secretary of State Marco Rubio signaled a stronger commitment to the region.
I'm proud to announce that the United States commitment is being evidenced to ASEAN is being evidenced by action. The United States is now going to, as we announced last year and have been following up in the year since our last gathering, leverage all available tools in our government to strengthen these relations, and that includes on the topic of foreign assistance. As part of that effort, we're delivering $2.5 billion in U.S. government strategic investments in Southeast Asia.
China correspondent Min Min Lo is at the meeting. She joins us now for more. Min Min, it's not just those tariffs on Indian oil, on pharmaceuticals, which could impact India and China that we were just discussing, but the stopgap tariffs are also due for replacement. There could be some more coming, which might affect ASEAN member nations. How much discussion is there of this tariff threat?
Yes, certainly there is a lot of anxiety around this looming tariffs, right? You mentioned the pharmaceutical tariffs, and Le-Thu mentioned earlier India would be most affected, but a lot of Indian drugs get their ingredients from China, so China would be indirectly affected. Southeast Asia doesn't export as much of those drugs to the US, but Singapore does have a sizable biotech sector, although a lot of Singapore's drugs that are exported are patented drugs, so they're not going to be affected to as large an extent. But still, it's just the sort of anxiety that people here are feeling given the changing tariff regime, right? Because the US Supreme Court struck down those tariffs, and then there was a 10% blanket tariff that Trump administration put in. That is set to expire this Friday, and there is huge expectation that potentially Trump is going to come up with new levies to impose on countries in Southeast Asia, and this region is going to be severely affected because most of them are small nations and they are export-oriented nations. They are also price takers in the global market, so they will be disproportionately affected by any of these tariff threats from the US. And I guess you could see Marco Rubio there trying to reassure ASEAN partners that the commitment from the US is still there. He said 100% at the highest levels, and he committed to those $2.5 billion investment pledge in Asia as well. Question is that enough to reassure the partners here around all the concerns around tariffs and, of course, the Middle Eastern war that has disrupted shipments through the Middle East as well?
Yeah, part of President Trump's argument here was that not just ASEAN nations, but all the nations that have been subject to these stopgap tariffs have not been doing enough on forced labour practices. Have the member nations there gathered had anything to say about that, and how can they react or adapt to a new tariff regime?
So we haven't heard a lot from the Southeast Asian nations. There's an ongoing meeting with Marco Rubio and the ASEAN countries, and of course China's Foreign Minister Huang Yi will be meeting with the ASEAN countries as well. We haven't gotten any definitive statement from the ASEAN countries around this, but certainly they will have to adapt, right? And yes, when it comes to the Middle Eastern war, already the impact of inflation, the impact of higher fuel prices is being felt here. There were protests that broke out earlier this year, back in March, prompting President Marcos to call for a national energy emergency. You look at markets right now, the peso is tanking, the Japanese yen also, we are on intervention watch, and all of these emerging market currencies are being pressured because of higher oil prices. So there's a lot of impact being felt day to day by ordinary citizens at the pumps, at the grocery store. So this is something that is key for all of these ASEAN nations to come together to really unite their purchasing power in order to negotiate for a better deal with the US.
All right, that's our China correspondent Min Min Lo there at the ASEAN Foreign Ministers Meeting in Manila. Let's get a bit more on the tariff threat and the ASEAN geopolitical outlook with Huong Le-Thu, Deputy Asia Pacific Director at the International Crisis Group. She's an international relations expert, and her research focuses on Southeast Asian security, ASEAN regionalism and great power competition. Huong, thanks so much for joining us today, and there's plenty of great power competition going on at the moment. I'm just wondering, with these potentially more tariffs coming, how would you characterize the trading environment at the moment between ASEAN and the US, and what can ASEAN member nations do to mitigate against this?
Well, first of all, it's good to see Secretary of State of Marco Rubio is in the region for the ASEAN Foreign Ministers Plus meetings, which is a way of reassuring. And his statement about ASEAN being at the center focus of the US foreign policy, be them genuine or not, is music to the regional ears. Of course, the region is very worried about the tariffs. They're substantial, and perhaps we are not seeing end of them as new tariffs roll in. At the same time of turbulences caused by the Middle East, crisis and disruptions to the oil, gas, and also fertilizer supply, very critical for this region. So there are pressures from many fronts, tariffs being one, but also disruptions in critical supply chains, all cause uncertainties, anxiety, and already resulting in higher costs of prices, higher cost of living, but also business operations, which in this region, most of the time operate on a very thin profit margin. So all of that will actually affect quite a lot the well-being and economic prospects of the region.
Well, you mentioned Marco Rubio making some reassuring remarks in terms of his commitment or US commitment to the region, but it's important to point out that China's foreign minister is also in attendance, as is Russia's Sergei Lavrov as well. What can ASEAN member nations do to prevent themselves from being dragged into a new Cold War dynamic?
Well, ASEAN actually addressed and said about itself is the epicenter of great power competition. And the fact that other presence of foreign ministers from China and Russia you mentioned is not a novelty. It is the presence or lack of the United States that has been more of a worry for the region, because there's a level of anxiety that US looks elsewhere, either on homeland, Western Hemisphere, or Middle East, and forgets Asia Pacific, and more so the group of smaller and mid-sized countries in the Southeast Asia. So the fact that US presence is there is in fact reassuring, because it is better for ASEAN to have that convening power than not. And that's where its importance and agency is derived from. It is at the sidelines of those ASEAN meetings that big important meetings happen, either between US and China, even Australia and China. Those who don't usually either speak up or not on good terms or fluctuates have an opportunity that ASEAN neutral and kind of not taking sidelines offer. And so that's, in a way, it is exercising ASEAN's agency and convening power. And then the fact that they are coming means that ASEAN still matters, or the region matters.
Yeah, to your point, is there an opportunity for ASEAN member nations here as well, and a possible risk for the US? On the one hand, if the US is piling on tariffs, does that risk driving ASEAN member nations into deals of convenience with China and Russia?
Well, the biggest fear for ASEAN would be not having options. So having US there, and we just heard Secretary Rubio announce certain new initiatives and investment, that is good news, because that means that there is not that scenario, or the prospect of scenario that you're saying, that there's no other options, but China is not necessarily there, although the trends are showing more of that than not. But it is in Southeast Asians' interest to have US being there, invest there, show up in the regional diplomatic and major times, including diplomatic gatherings. But this summit also happens at a very geopolitically important timing. We just had yesterday, an incident between Chinese and Philippine coast guards over at the South China Sea. There was Chinese ICBM tests some time ago in the Pacific. It's a time of great tension going on in the region. So absence of United States would be not desirable for the balance of power. And already since the President Trump took over, and there has been a slip in perception of US reliability, US commitment to the region, US public diplomacy, and in general, the public perception tilts towards China globally, and not let alone this region, which is traditionally closer geographically to China and recognize that China is not going anywhere, is a resident power, economic and geostrategic. And it is more important for US to realize that under this administration.
Look, as you point out, this meeting is taking against the backdrop of fresh clashes between China and the Philippines in the South China Sea. Although, to be fair, this kind of thing is not uncommon to the area, and nor is just ongoing negotiations to try and sort this out. Can you see a binding framework emerging anytime soon to settle the South China Sea issue?
Well, it is a little bit ironic that under Philippines chairmanship of ASEAN this year, and at the beginning of this chairmanship, Manila did take on an uneasy task to finalize the Code of Conduct in the South China Sea, which is a regional dispute mechanism, a commitment between the ASEAN member states and also China. But there is a reason why these negotiations have been taking more than 20 years, and it's unlikely that any of differences that have been persisting is going away. The claims are not going away, and obviously China's attitude towards the claimants, towards the claims, and is not changing. Is not willing to take any compromises. In fact, the opposite. The growing tension are not supporting, not conducive for finalizing the Code of Conduct, even though it would have been a welcome development, though there would have been necessary compromises on all the sides. So. In a way, it's good that the diplomatic negotiations and talks and diplomatic solutions are continued to be pursued. But at the same time, we see growth in tensions, in risks of escalations. As you mentioned, this is not a single out incident. It's been for a number of years, and they are on a growing trend. So we are facing real threats of intended and unintended escalations, also risk of miscalculations that can unintendedly become a major hotspot, major tension that will be very hard to de-escalate. So as much as I don't see immediate solution for the South China Sea tensions, it is important to keep the diplomatic channels going on.
Huong, just finally, I want to talk about the latest flare-up in the conflict in the Middle East and what that means for ASEAN. How can the grouping leverage its relationship with these big powers, the US, China, Russia, to try and soften the impact of energy costs at the same time without losing autonomy?
Yes, so since the outbreak of the war in Iran and the disruptions in the Strait of Hormuz, as I mentioned, very directly impacting the region, Southeast Asians have been quite active in finding solutions among themselves to secure resilience in supply chain, especially critical like oil, gas, and fertilizers. So there are a number of frameworks in place of ASEAN related frameworks, including on energy security, but also the ones that include non-ASEAN member states. For example, with Japan, Japan has championed this new initiative called Power Asia that gives additional loan and other ways for supporting the diversification of those supply for the region. Of course, closer consultations with the United States and hopefully some sort of assistance and support for lasting ceasefire and stabilization in the Straits of Hormuz is one. And China, on its hand, offers, of course, a number of support, assistance, or concession loans as well to a number of states. So it is going to be a mixture of solutions with regional and extra-regional powers as well.
All right, Huong Le-Thu, we're out of time, but thank you so much for joining us today. Deputy Director, Asia Pacific at the International Crisis Group. Still to come this hour, we'll talk more about Iran. Diplomatic efforts appear to be stalling as the conflict enters a new phase. We'll look at why President Trump is downplaying the prospects for talks and what growing threats to key shipping routes could mean for global energy markets. This is Bloomberg.
I will tell you, they want to desperately meet, and until they're ready to meet in a meaningful way, we have no interest in even.
Iran has been reaching out to the United States, both directly and indirectly, to engage in talks about settling the differences with regards to what's happening in that part of the world. Unfortunately, so far, even though we have reached agreements, they have not kept their commitments. And as the President stated earlier today, I guess, today Washington time, yesterday our time here now, the problem we're having right now is that they're not serious about talk.
That's President Trump and Secretary of State Marco Rubio cooling prospects of any immediate talks with Iran as the two sides exchange strikes. Meanwhile, concerns are also growing over threats to shipping in the Red Sea as well as the Strait of Hormuz. Bloomberg Managing Editor Jill Desis joins us now with the latest. So, Jill, not a lot of agreement here, not even any agreement about whether or not Iran even wants to talk. So where are the chances of a ceasefire resumption placed right now?
Yes, well, Paul, I know that we've spoken on this program many times over the past few weeks about, whether or not these peace talks were ultimately in danger. I mean, at this point, it does seem like that interim agreement reached in the middle of June is just not really going anywhere. Obviously, you just heard from the President of the United States as well as the Secretary of State, Marco Rubio. What I would say is that while they're saying that, Iran wants to talk, we're hearing the opposite from Tehran. They're dismissing claims from the U.S. on that front. So it doesn't really seem like we've made any kind of a progress in terms of furthering those negotiations. There's obviously a lot of critical issues that have long seemed difficult for these two sides to really come together on. Obviously, shipping, particularly in the Strait of Hormuz, remains, that really sort of pressing choke point there in terms of who actually controls traffic that's flowing in and out of the strait. The other issue that does seem to be a pretty massive sticking point, at least as described by Iran's foreign minister over the weekend, was discussions over Iran's nuclear capabilities. That's obviously been a massive issue for these two nations. It was for years and years before going into this conflict, remains kind of, at the center of some of these talks here. So at this stage, it doesn't really seem like we're seeing a lot of progress whatsoever.
Yeah, and in fact, possibly going backwards because we're getting reports of some oil tankers now pausing their journeys through the Red Sea. So what's the status of the Red Sea, Strait of Hormuz as well, and what's the potential reaction here from Saudi Arabia and other allies if ships can't get through the Red Sea either?
Yeah, so this is obviously a massive point of concern here, Paul. I mean, for as tied up as shipping has been through the Strait of Hormuz and the Persian Gulf, nations like Saudi Arabia has been able to actually divert over the past few months some of that energy supplies through a pipeline through the country to get to the opposite side on their western coast to ship things through the Red Sea. Now you've got these Iran-backed Houthi rebels in Yemen that are threatening ships that call at any Saudi port. So obviously sort of bringing, that contention that a massive pipeline where, energy supplies was able to be diverted through those alternative channels might now be at risk. That's certainly what traders are assessing now. We're seeing Brent climb back above $90 per barrel. And so it does raise those questions about, if there are that potential for ships to be targeted in the Red Sea, what does that mean for the world's energy supplies?
All very good questions. Bloomberg Managing Editor Jill Desis there with the latest on the conflict in Iran. Still to come, our next guest says the volatility in memory chip stocks reflects a healthy correction, not a broken bull market. We'll have more with IG International's Fabien Yip up next. This is Bloomberg. Welcome back. You're watching Insight. Let's take a look at how markets stand. Mainland Chinese markets heading out to lunch. Japan, meanwhile, coming back online, and the Nikkei better by almost 2% at the moment, perhaps given somewhat of a tailwind from the yen, which is right back where it was 40 years ago, historically weak right now, 163.13. Kospi having another, the Kospi's Kospiing. It's up 5%. We've seen the sidecar activated for the third straight day this week, so tech stocks having a good run. Taipei also better by 1.8% as well. Crude prices, well, that's not hosing down the enthusiasm at all, even though we're above $92 a barrel for Brent at the moment. As China went out to lunch, better by about 2/3%. All right, let's get a little bit more on markets. Get to Garfield Reynolds, who leads our Markets Live coverage for Asia. So Garfield, forget the oil price, very much risk on. The Kospi, as I mentioned, the sidecar activated again. What's driving all the optimism today?
Well, I mean, the optimism for tech in particular is that investors have, become reassured somewhat about the longer-term prospects for the AI boom. The come down for the Kospi and for the SOX index in the US, so those stocks over there, was an accident waiting to happen after we'd had parabolic gains in recent months. So now that some of the heat has come out, some of the leverage plays have been blown away, we've got better positioning. We still have strong current earnings and strong current sales, expectations that those will generate profits and will go on generating strong profits. So against that backdrop, we've got another round of investors looking at tech shares after recent declines and saying, well, now they're worth buying because now they're cheap enough for the risk, which is still there, to be worth it because of the rewards that we can see.
Look, we need to talk about the yen as well. We're at historically weak lows. We're on intervention watch again. But on the topic of intervention, I mean, is there really any point with the curry trade looking so appealing right now?
Oh, well, there is still the potential that they will try and do something, particularly if, last night was probably worryingly rapid for the Japanese authorities based on how they've responded before. So they will be pondering what they can do. However, the very least, until either if the heat was to come out of what's going on in the Gulf, or if we get to next week's Fed meeting and that tacks a bit more towards the dovish side than the hawkish side, then you might have the fundamentals that would allow them to get some real impact if they intervened. At the moment, all they would do would offer yen bears a better entry point to put shorts back on.
What point's the oil price going to matter again? Nobody seems to care right now.
Well, I mean, the oil price also owes a lot to it's a grind higher. I mean, if you think what happened back in March and April, and although combat has ramped up this past week or so, it's not at the levels it was back then. So if it went to those sort of levels and you get the really big gains, 5%, 8% in a day, and you stick there, and you get, say, Brent above 100 and going noticeably higher, you would think that would have an effect. It would certainly bring Fed hikes forward. It would send yields up very strongly, and that would hurt a lot of assets, which should be vulnerable to higher yields. But so far at the moment, this week, tech stocks, gold, Bitcoin, they're not at all concerned about higher oil and higher yields.
You mentioned tech earnings a moment ago. We do have Alphabet, Tesla coming up as well. Could we see a bit of a sell the fact moment here? And expectations are always so giddy around this kind of thing.
Well, it's interesting, Paul, because we've had a series of tech earnings that seem to deliver for the companies themselves relatively strong upsides, and yet investors sold. I actually think that we're going into the current earnings season with the potential for a more traditional, sort of post-earnings bounce, provided we don't get either too big a surprise on the upside as far as CapEx is concerned, or too poor of a downside on the forward guidance. I mean, that's been a key. So if we get reassurance about the capacity of LLMs and the other AI tools to deliver increased profits in the coming years, then that would set us up for some strong gains, particularly with Alphabet, because there were the reports that Google is well advanced in development for a chip that would allow it to improve on its development processes. So if you get some confirmation from that, then that's a sort of thing that could spur gains, not just for Alphabet, but for a range of AI space stocks.
That was Garfield Reynolds, who leads our Markets Live Asia coverage. Let's get a bit more on the market insights from Fabien Yip, market analyst at IG International. And Fabien, I want to pick up on that tech story that we're looking ahead to for the rest of the week. Alphabet, Tesla coming out. Is hitting the target going to be enough to satisfy markets here?
I think in the past few quarters, we already saw that it's not enough, hitting the numbers alone, hitting the top line and bottom line. A very good example we saw last week was TSMC that had a pretty blowout quarter, I would say, with revenues at record. But the market reacted quite negatively because they raised their capex guidance quite significantly. So like what Garfield mentioned, I think the capex guidance will definitely be of focus this time round, especially for Alphabet and Tesla that have lifted their capex guidance quite rapidly over the past few quarters. And Tesla is even likely to turn negative in free cash flow this quarter. So I think not only are investors looking at a reasonable capex expansion, they are also looking into how these big techs are able to afford that capex expansion. So whether this is going to cause a stress in their balance sheet health, including increase in debt levels or rapid decline in free cash flow, will be something that people will be focusing on.
Yeah, what sort of flow through do you expect to see in the Asian markets after those results are announced? And I ask that in the context of what we see with the Kospi, which has been so volatile this month. We've just had the sidecar activated for a third time this week, and we're 3 days into the week. So what are you expecting to see in Asia tech stocks tomorrow?
Well, I think, first of all, if these big techs are still reporting very strong numbers in terms of current quarter as well as forward guidance, it will reflect a pretty strong demand for AI going forward. And given these, a lot of the Asian tech companies are upstream companies or providers of infrastructure to these hyperscalers, I think that will flow into a pretty positive momentum for Asian companies. But at the same time, we will also have to pay attention to valuations. I think the recent pullback definitely has provided a pretty good foundation for Asian tech to rise further, because what we saw in semiconductors, for instance, some of these names are down 20% from their peak. It's actually providing a pretty good breathing room, a healthy foundation for the rally to go further. I would also highlight that there's been a rotation in the AI rally quite recently because of some news we're seeing in China. So I think the broadening of the market that we're seeing here is pretty healthy development, where some more expensive names in Korea and Japan investors are rotating away from those into the laggards in China.
Yeah, you mentioned some news in China. You know, it's like a second DeepSeek moment, really. That Kimi 3 model from Moonshot, also a new model from Alibaba as well. How compelling is that China tech story for you at the moment? Where are you looking?
Yeah, I think definitely a lot of exciting news in China, and just reminding everyone that if you look at the GDP growth focus, as well as some of the policies that were released by the central government earlier this year, there was a lot of emphasis on AI self-sufficiency. So it looks like the Chinese companies are delivering those promises earlier this year. If you look at the models, I think quite promising in terms of the compute capacity as well as the capabilities of these Chinese models. And I think one of the things that reminded us about the DeepSeek moment was people were at first quite worried how the Chinese model could change the demand for hardware and infrastructure, because some of these models would require less computing capacity. But if you look at what happened in 2025, after a knee-jerk reaction in global tech stocks, actually the global tech market rallied pretty significantly, because at the end of the day, we are talking about a bigger pie, more users in the AI technology space, rather than just merely focusing on one or two models requiring less computing capacity. So I think it's a win-win for the overall market.
I want to talk about Japan as well, because the Nikkei's had a very good year, perhaps helped in no small part by a very weak yen. And in terms of the yen, I'm wondering where you consider the floor might be at the moment, because with US yields above 4%, it's hard to see the carry trade going away anytime soon.
Yeah, that's right. So structurally, I think the yield differential between US and Japan is definitely driving the very weak yen. And at the same time, we are still seeing very little commitment from the Bank of Japan to hold a rather hawkish stance. And at the same time, I think a weaker yen has benefited Japanese exports, which, as you mentioned, Paul, has helped the Japanese stock market earlier. So I think a lot of the fundamental factors, if you look at them, point to a weaker yen trend going forward in the medium term. And if you look at some of the technical positionings or the pivot levels, it looks like there isn't a very clear floor as to where yen could be, but I think I'm definitely looking at that 164 handle, which could point to a pretty strong technical resistance. But I think more importantly, intervention is not going to solve the problem for Japanese yen in the long term, because at the end of the day, it still requires the Bank of Japan to hold a firmer stance, a more hawkish stance, in order to reverse the trend.
To your point on intervention, if we did see intervention, could that be a sign to buy that dip?
If we see intervention, I think it's going to be short-lived. If you look at what happened in April to May, despite a record intervention level, the yen reverted to where it was before the intervention in 6 weeks' time. So I think without, like I mentioned, the change in stance of BOJ, it's quite likely that after a dip in the dollar-yen FX rate, it could rebound if there isn't a change in fundamental stance.
All right, Fabien Yip, market analyst at IG International. Thanks so much for your analysis today. Now, on the subject of Japan, we've just had a 40-year bond auction, and it's gone pretty well. Also, the sale drawing the strongest demand ratio since March 2025, bid cover ratio of 2.82 versus the 12-month average of 2.55. So a successful 40-year bond sale. So those bonds are going to mature in 2066. And just for context, a lot can happen in 40 years. If you went into a coma in 1986 and you woke up now and took a look at the yen, you'd see that was unchanged. All right, let's take a look at India markets just ahead of the open as well. We're about 2.5 minutes away from that, and it's going to be a big day for pharmaceutical stocks as well. So we'll be keeping a close eye on those. This is on the news that President Trump said there will be 2 years for generic manufacturers to move production over to the United States or face a 100% import duty starting in August 2028. So we'll see how those stocks react when we get going. For now, in the pre-market, a little bit of weakness there. The Sensex down by about 1/10%. And there you see some of the stocks that we'll be watching when we do get going. Sun Pharmaceutical, Dr. Reddy's, among others, that could be impacted by this tariff threat. All right, staying on India, Prime Minister Modi's push to replace critical imports with locally made products is creating new stock market winners. And those include producers of fertilizers and automotive heat shields. For more, our Asia Equities reporter Ashutosh Joshi joins us from Mumbai. So, Ashutosh, how crucial is import substitution for India, and how are companies looking to benefit from this push?
Thanks for having me on the show, Paul. Import substitution has become extremely crucial for Indian companies as well as Indian government. More than a necessity, it's becoming a structural play here. A number of global incidents in recent years have shown that countries such as India need to expand their self-reliance. India's policy for pushing local manufacturing is almost 10-year old. Initially, India saw success in sectors such as defense, to some extent chemicals. But now, with recent volatility in overall global supply chain, we are seeing a renewed push for local manufacturing. From the government sides, a number of initiatives have been announced. Companies are being offered incentives companies to look for products that are currently being imported, but whether, if not the entire supply chain, but a portion of that can be manufactured locally. And this is leading to some of the companies which are operating in this area emerging as stock managers' top picks.
So can you talk to us about how fund managers are identifying potential stock winners and what are the challenges there?
Yeah. The challenge is a bit twofold here. Firstly, not every import substitution effort will lead to success. At the same time, import substitution also means that the locally manufactured product has to be globally compliant, has to meet the standards that the overseas products are currently providing you. So from a fund manager's or investor's point of view, the challenge here is to identify companies based on their key strength, their balance sheet strength, and their technological know-how, to what extent they will be capable of replicating a same product here, and what's the horizon here. It's not that in a short span this will be achieved. It's going to be a prolonged process. As we saw India's defense, which was the first sector, it took almost 10 years for India to establish local manufacturing, start replacing products that were being imported. So similar process is happening in multiple sectors, spreading from fertilizers to specialty chemicals to some of automotive component makers. So the challenge here is for companies as well as the government to look for areas where there is inherent strength for Indian companies to push for import substitution, and secondly to come up with product and the capability to manufacture the same.
All right, Bloomberg's Asia Equities reporter Ashutosh Joshi there. Still to come, investors will be watching upcoming mega-cap earnings for clues on whether the AI trade can survive a fresh bout of volatility. We'll have a preview of those reports next. This is Bloomberg. Welcome back. You're watching Insights. Alphabet, Tesla and Intel are among the major tech companies reporting earnings beginning later on Wednesday, and their results should give investors a clearer read on how artificial intelligence spending is reshaping the industry. For more on this, let's bring in Bloomberg's executive editor for technology, Tom Giles. And Tom, expectations always giddy for these sorts of numbers. What are we anticipating here?
Yeah, as you said, the question is always just how much are these companies going to be spending on artificial intelligence, on the chips, on the infrastructure that's needed to fuel this revolution. And it's always a balancing act, right? Spend too little, investors worry that you're going to fall behind. Spend too much, investors worry that what are you doing to your margins and will there be a payoff? So I think all of these companies' earnings are going to be scrutinized for those very specific questions. And it's always hard to tell how much you're going to be punished for overspending and how much you're going to be punished for underspending. But we'll get our first glimpse when later today in the U.S. when Google reports. And they're an interesting case study, right? Because on one hand, they are absolutely among the biggest spenders when it comes to AI infrastructure, the chips, the data centers, et cetera. But they're also a big beneficiary. Gemini is their artificial intelligence tool, as you know, and it has historically shown itself to be a really strong contender to OpenAI and Anthropic and the Chinese models. That said, We're waiting on any update they give us on the release of their most recent version of Gemini Pro 3.5. There's been delays in that. We've written about it and concerns about just how quickly they can get that out the door. There's a lot writing on that. So everything that Sundar Pichai says about that is going to be closely scrutinized.
Yes, and how might the market react to anything less than mind-blowing?
You know, expectations are very, very high for all of these big tech companies in the U.S. They've kind of spoiled us. They've spoiled the market by putting out numbers that show that, you know, they are benefiting from the AI revolution. The thing I want to just stay on Google for one more beat to make the point that Google is a very interesting case study. They are a provider that has the wide range of potential benefits from artificial intelligence. They have cloud computing. They have Gemini. So it's a tool that's capable of serving as a chatbot, as a coding agent. And they also have a strong advertising business that generates the cash that they can use to fuel all of this and absorb some of the impact. And so they've really spoiled the market. And yeah, I think people are going to be looking for big numbers from Google later today, excuse me.
Related to this, we've also heard from Scott Bessent saying the US is planning to scrutinize Chinese AI models for IP theft. What's he talking about here, and what's he proposing to do?
Well, anytime you see the Chinese companies' models, the big Chinese players demonstrating that they can give U.S. companies a run for their money, and we saw that last week with Moonshot, right? Kimi 3. That makes people, and that sent a shockwave around the world. You saw it in market sell-off, and that raises that grabs the attention of U.S. lawmakers, and they've been talking for a while about this concept of distillation. Are Chinese models and Chinese model developers are they borrowing too much from U.S. leaders? Now, sure, that's a question that it makes sense for the U.S. to be asking. They're doing an investigation, or they say they're going to be scrutinizing them. And what I would hope is that once they scrutinize them, they share what they've learned and not just make accusations, right? Because the fact is, China does have certain advantages when it comes to AI development and AI models.
All right, Bloomberg's executive editor for technology, Tom Giles, thank you. And that is it for Insight. Horizons Middle East and Africa is up next. Keep it here with us. This is Bloomberg.